Hello guys, welcome to the Trading Parrot. Bitcoin, after breaking down from the head and shoulders, has managed to hit the target of $85,000. In today's video, we're going to focus on answering a few important questions so we can move on with an informed, data-driven approach. First of all, we need to assess the damage. What are the levels broken, turned into resistance right now, so we understand what is currently holding the price for a revenge rally or any potential upside. What are the market maker low-hanging fruits? For example, is there anything on the downside that still needs to be consumed? What is large liquidity, fair value gaps around the price? All of that we need to cover. Is there any hidden strength signal incoming or active? And I will show you a couple of them that are starting to gain some strength that are absolutely worth looking. And what is the main reason or driving force for the pullback? Because if that motivation is still on the table, potentially we could extend the move to the downside as well. All of that is what we need to cover in today's video. Make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos, and 1,000 likes if you do it before I start with the content. That is even more phenomenal than any other thing. So let's look at the CME gap in here. Yesterday there was a lot of debate on what was going to happen as we consume on early Monday morning the CME gap, and we started accelerating into it, but you can see how after the third candle in green we immediately slow down, and we kind of hint that we were gonna left just a hair of the CME gap, and eventually that was the case. We ended up leaving just a thin hair right there. There were a few comments in the video saying, I believe that the price action is not even going to take the full CME gap. Some other people say we're going to take it, go slightly higher and get a rejection. So there was a bit of bearishness from the audience, and I think they were completely right. On the 4-hour, we can see that we achieved the full technical target of 85,000 just by a few dollars left in there. Now we are battling with this area of the volume profile, which is the 86,445, which we also appreciate that was there, but we are approaching it from below. We already consumed that fair value gap, so there is literally not immediate motivation to go into 87. Where we have some motivation is from the fair value gap chunky after the collapse, right? The price crossed from pretty much 90 into 87. That's 3K in a single 4-hour candle. We can observe more clearly the overlap of that fair value gap on the 4-hour with the lighter one, which belongs to the daily candle that is overlapping right at around 87.5. But the whole chunk extends from where we are into more or less 89,500, followed by the one at 92 that we never went to touch. Remember, at 92 yesterday we observed some liquidity that we left on the table. Price didn't have any strength to go into that, and there's been some news. I'm not fully convinced that this is the only motivation for the sell-off, the driver of the sell-off, but apparently, according to news, this comes from China Bitcoin mining ban. What happened? Over the last 24 to 48 hours, Chinese authorities in Xinjiang dramatically tighten the mining regulations, forcing approximately 400,000 mining machines offline. This represents roughly 100 EH per second of hash rate reduction. So I had to go into my mining tab in here to understand what has been the impact. Supposedly this is not up to date. Let me see, the last candle is Tuesday, so the decline, they claim that it was like over 10%, so this is still within the range of the oscillation of the hash rate. I still don't even see the hash rate coming not even into the lowest PNR, which we have done in the past multiple times. Remember that when the hash rate comes very low, on the assumption that Bitcoin survives the hash rate that low, hash rate lower is less processing power from the network. So when you go lower, Typically, with the price declining at the same time, that is a signal to buy, but we haven't yet gone into that level. You can see that in some corrections, for example, this one from 112 into 100, then we got the hash rate lower and we went for an all-time high. On this one there, the hash rate was lower at 84. We have actually a signal from the hash rate indicator from Capitulation, I cannot remember what's the name, but at that point we had a buy signal as well, and that went to the all-time high as well. So corrections together with the hash rate coming down is not necessarily a bad thing, assuming that the hash rate comes back up. Obviously, if the hash rate goes to zero, obviously the network stops to exist. There's been other news, and I caught this one from Trader Nick that is also included in today's edition of the Crypto Intelligence Report. Remember that you can have a look for free to this report every day, 7 days of the week. And today's issue is highlighting something that's calling my attention. Analyze Fed chair speculation with Trump, which now everybody, instead of speculating whether we get cuts or not get cuts, the focus of the attention has moved into who's going to be appointed as the next chair and how much rate cuts that dude is going to bring. And apparently there's two Kevin that are taking most of the probabilities. We have Kevin Hassett, 53% versus Kevin Walsh, 42%, both expected to support aggressive rate cutting. Yeah, of course, they're pretty much a puppet of Trump. He's appointing it. He's deciding who's gonna get my wishes to come true towards the 1% target, potentially triggering 2021 style stimulus, while noting that the S&P 500 PE ratios remain well below dot-com era extremes, suggesting room for upside despite expensive valuations. Please note that Trader Nick has been very bullish in this area of the price. He thinks, well, any point in time in history we have fears of a collapse, a dot-com era, and that shouldn't stop you from trading. And he's coming from a trader perspective. He tends to use stop losses. So yesterday, for example, he said I was wrong and he got stopped out. So that was a small loss for him, and he now needs to rebuild another position. But anyways, this is important because yesterday there was a shift. I think one of these Kevins had like an 80%, and then there was this new Kevin coming in, and that coincidentally started around the moment where we started having the crash on Bitcoin. But at the same time, there was the mining situation in China. So let me know in the comments if I'm missing a third fundamental reason for the crash. It will be interesting to understand. Of course, for trading, we really don't need that information. We just focus on what's going on in the price. And on the 4-hour yesterday, we were spot on. We say that if this doesn't manage to reclaim the 48, 49 RSI and we see a rejection from there, we can get a double rejection. What are we talking about? We are talking about the rejection of the daily that was yesterday pushing towards the 49, and it got completely rejected back down. And on the 4-hour, at the same time, we were visiting this resistance. Unfortunately for the longs, that was a rejection double on 4-hour and on the daily, both puke, but none of them have managed to get into either a next level of support on the 4-hour, neither on the daily. We're getting close to green support in here, which is coming in at 33. After that, we have the 22, the global support, and we are no longer going to talk about the revenge rally from this level of 36 going sharply into 49. It is possible, always, sure, but it's less likely. So I'm expecting a move down in here, something that looks a bit more like a channel in this direction. So possibly getting into 46 or 44, something around that level, if we get a bounce from here. Otherwise, we're gonna just continue into the 33, which is the next support. I left the arrow pointing at that level. So a lot of things are going on. Price is moving, is starting to pick up with volatility, and we need to pay a lot of attention to what's going on. So grab your notebook and start taking some notes. First incoming level of bullishness if we reclaim the 86 for a potential move to consume the fair value gap into 89,500. That's thesis number one. And that could bring the RSI 4-hour into those levels of 44 that I was mentioning. After all, the 4-hour has peaked twice against the PNR on volatility to downside, so some relief is not crazy to think. It's not being bullish, it's just the natural flow of the price, which is constantly oscillating. It's never just a sharp decline forever. And if you get a sharp decline, you also get big fair value gaps that get consumed. That's what we've been doing all of this range, and I don't see any reason why not to do it again. Now, looking at the daily, we got incoming in here something that probably you haven't noticed, which is the MACD daily about to settle a bearish cross below the zero line. Of course, the strongest sell signals are from above the zero line after a huge rally from top to bottom, but here we haven't even managed to get across the zero line. So we are in bear territory and we are already forming a bearish cross on the daily. After this one, that was already below zero and pushed the price back down into 6,000 negative. This one that is already 1,700. What if it can bring it to 6,000? I don't have a reverse MACD. Maybe I'm gonna build one this afternoon. I don't know, maybe we need one. But volatility is starting to go to the upside after having peaked there on the daily, which is also the case for the 4-hour. They are both peaking at the low end, and the daily, despite the fact that price came down, continues to develop to the upside. That green support I mentioned on the daily is currently located at 84 and still supports my thesis number 2, which is what if we continue going in here and we form some sort of double bottom that has a neckline again around the same levels of 94 with targets into 105. That's super bullish, and I know many of you by now watching the video are spitting on the floor, discussed about the bullish targets. This is not about believing that we can get there. It's about discovering under the carpet what are the potential things that can happen and trying to organize them, try to see which one makes more sense, not blindly swallowing any glass yet, just understanding what could happen, because remember, all the stupid channels have 2 targets at the moment, okay? Among all the channels, probably 70-80% are bearish, and I'm talking about 67 and 74. We were one of the first ones that talk about those levels when no one was talking about those levels, but given that now everybody talks about those levels, we need to start thinking, hey, wait a minute, 80% of the channels are not gonna get everything right because they're gonna get a lot of traders to enter shorts. And if everybody's short, price doesn't fall, okay? So there is a chance that you go into 84 and you disappoint with the full technical targets. Some people are placing the target like this, so they create a handle like this one and they place it from the top that gives you 67. Some other degens are using the flag like that, which is just crazy. But if you place the flag like this and you position it from the bear flag, that is giving you roughly 48K. So they're assuming that from there you just get one single leg into 48, which I will say is possible, okay? But I'm gonna give it 1 to maximum 2% chances of happening. So it is possible, yeah, but just 1 to 2%, I will say. I will say the 74 and the 67 for lower targets are still on the table. They are possible, but we need to assess that there is a new kid in town now, which is what if we form an 84 double bottom and we come back into 92 or we come back into 90 to close the CME gap. Yeah, that is possible as well. So we need to continue looking for clues. And what other clues are important today? We have this fair value gap chunky into 89, the 92, they are very juicy. It's very difficult to think that now price is just gonna get attracted into the lower low straight away without doing any leg up. At the very least, take the 87,600. That's the daily, overlapping with the 4-hour. That's the most conservative upside target. Second, yeah, maybe getting into 89,500 and consuming it all, just like we did in here, or in the reverse way with the brown ones. The most aggressive currently is to go to 92, and if we hold there, we get a breakout. And at that point, well, that's upside potential. Into what? Well, into the fair value gaps that are to the upside. SOPR, it continues to say, well, last month we were touching support, so this month we should go at the very least to the first support, which is 76. And that is in the way of the target of the bear flag, which is 68. The second support is 63. Alright guys, one bullish signal. Yesterday we had the 70 longs that didn't play out, but I'll tell you more later because there's new developments on that one, and that's also very juicy, particularly if you are on a long. So this signaling here failed. We are getting another signal. Yesterday I gave you the heads up when we were pinching the 31. Finally we pinching here 22, and we're getting that signal. So that is a 22 is relative to this signal that we have in here. Notice that that pushes up from 111 into 114, then it dumps into 108, and from 108 goes into an all-time high. So the nature of the signals is not always perfect. Sometimes you get an early rally, 10%, and then from slightly lower you go up. Because what does it mean, this signal? It means that there is a lot of shorts. But how come there is a lot of shorts? Yeah, of course, guys, all the other channels are screaming the bear flag. You scroll through Twitter and 1 out of 3 calls are for the 67 or the 74. Just like a bunch of months ago, everybody was talking about the M2 and how high Bitcoin was supposed to catch up with the M2, which was calls for 160K, 200K, 300K, and it didn't play out, right? Right, where are we with the weekly time framing here? We haven't managed to catch up with what we did in 2021. We are more disappointing than in 2021 for a dead cat bounce. So if you take this move in here from 69 to 32 to 48 and you place the fractal here, you can overlap that from high to low and see that we managed to get into 94,600, the maximum. Last cycle, if you overlap it, we will have gotten at the very least into 98,800. So this is still at the moment going sideways, and it could still go into that 98, just saying, if we hold these levels. If we break down and we start taking the lows, of course, then we are wrong and we are going potentially into 73, according to the fractal. But notice that while missing this leg there. So there's that caveat. There's the caveat that we lost the support and we never came for a retest of the 44. That's another reason to think, where is the dead cat bounce? Or is that just gonna be as flat as that? Yeah, there is a potential that it's just gonna be like that, but the odds are always into go for a retest. It's more likely. It is not guaranteed. We have a mini capitulation on the SOPR yesterday on Bitcoin, lower than this one that print a buy signal. That buy signal pushed the price 7% up. So if by tomorrow we come out of this instead of going for the next one, that could print another buy signal. If we move 7% up, that pushes the price into 92. Another potential, just an open move, and the indicator I forgot was called hash ribbons. How can I forget that? That's very silly. Another thing to not take along from here, this is a signal contrarian, okay? This one is saying that the open interest oscillator is above the zero line. So we are no longer in the area where we get la creme of the creme, which is being below the orange line. When you are below the orange line, open interest oscillator screams, you have my permission to look for a long. And we call about that. We say, well, now we are below the orange line and we were trading at roughly 87K. And that pushed the open interest now higher. So that means that there is now open interest a little bit loaded to the upside, and it could flash the price slightly lower based on that indicator. So this indicator is not giving us permission to take a long. It's actually going in the opposite direction. If it gets to 11%, it's gonna scream, you have my permission to look for a short. And notice how long we've been liquidating longs. Yesterday we liquidated $600 million, and we continue in this season of liquidating only longs, or primarily longs. And we can compare that with the previous cycle that starts from around November into 2021, and it stayed in the green with just very short-lived moments in the red up until January 2023. So equivalent to now, that will be like January 2027, okay? So up until January 2027, we should be seeing longs liquidated continuously with some short periods. For example, when we go into 48 or when we go into 42 in here with red. Then after we come from 15 into 20, we have a large liquidation of shorts back again, and that starts the bull market again. Once we see liquidation of shorts, I'm gonna ring the bell in the channel and say, guys, shorts just got massively liquidated. If you don't invest soon on the next pullback of Bitcoin, you're gonna miss another rally, another cycle. And yesterday, as I said, we got so humble inflows and outflows that this really doesn't say anything. Yesterday, there were 357 outflows from the ETF's spot, and that is not bullish, guys. And that could come from the fears of the things that are going on that I mentioned earlier in the video. We went back into extreme fear at 11. That is more or less the numbers where we were bouncing in mid-November. We found a bottom around the 11, and last time that happened was in February 2025 before November. All right, let's talk serious. Let's talk about liquidity and everything else. So we came all the way in here on the 15 minutes at 85. We formed a double bottom on the 15, and we are coming back up into 87 as we speak. What are we leaving below the price? What happens if this fails? What is the risk? Well, unfortunately, guys, the risk is pretty scary because there is all this chunk that yesterday we observed from 83 to 76. All this chunk looks like a very dense range of liquidity pools. It actually starts with a very good motivation at 84 to 82.7. Then there is some peaks at 81, at 80, at 78, and finally the last one at 76.4. So definitely, if this wasn't done, there is a lot of motivation to go lower. At the very least, to hit and take up until 82,700. There is some decline, but compared to what we had in here, where we have peaks like this and then depressions and stuff like that, in this area, this remains pretty elevated in my opinion, which contributes to that cumulative to constantly increase. And that sharp increase means just one thing. If we get inside there, how are we going to bounce quickly? Because that could generate a short squeeze. It can get a long squeeze, which is taking all these longs down without any interruption in the middle. Of course, that is just the analysis. That is not the only driving force in the price action, but not recognizing those things in the chart is a mistake. Believing 100% in them that they drive everything and the price action must do those things only, that is silly because there's a lot extra going on outside liquidation pools. All right, so we have liquidated 1, 2, 3 long term. We have only left 4 and 5. Below that, some people are talking about the 48, but let me give you an estimate of what or how attractive in terms of liquidity currently is 48. Is more than anything between 59 to 50, right? So there is a depression there that could stop the bleeding. But if really there was a macro disaster, a black swan event, price can go to 48, okay? That's possible, like an FTX collapse. Possibly the bottom of the market is going to be somewhere around 60. But if there was Binance collapsing, boom, 48, done. Literally, easy. Last cycle, we were supposed to stop technical at 20, and we went to 15, courtesy of FTX. Sam made the trick. So who could do the trick of 48? I don't know. But are you going to bet that 48 is not on the table? No, I will say the technical target for bottom of bear market is around 60K. But you do like this to the price with anything as big as Binance collapsing, as big as MicroStrategy liquidating, or anything big, or miners rug pulling or going bankrupt because of energy or whatever, or quantum computer. Well, that's another beast. That takes the price to zero, literally. And stop saying there's protection for quantum computer. The protection doesn't protect Bitcoin network, okay? It doesn't, because there's so many wallets that are not gonna migrate to a quantum resistant wallet in time that can generate a massive sell-off. Can Bitcoin survive that? I have no clue. My finger in the air says no. All right, continuing with liquidity, 91K continues to be the largest level and good motivation to have a bounce from here. Is it guaranteed? No. Liquidations have been big. That is a source for potential relief. Again, it's been 656 million, similar to the one that we have on 1st of December. What happened to the price early December? Well, we were around here and we bounced very sharply, 11%. So from the point of view of liquidations, is supporting the thesis of some upside. We currently have some support, 2.7 thousand located at 85,500. There is not a lot of resistance, interestingly, nothing beyond 1K, and the 95, 94K is right now gone. You can see that they ended the resistance right where the price went into 85. It almost feels like they flipped resistance into the support at 85. They say, okay, you're not gonna come to that here. Well, I'm gonna place it right there as support. And that's where that liquidity appears to be now sitting. Now, as the price moves higher in this area, they have now shifted that up and the shorts are coming in to defend it again. Fire charts shows now 3 interesting levels. The first one is 75K, followed by 81K with 48 million. This one was 45, and we have 42 million holding the 85 at the moment. There's not a lot of resistance to the upside. We are forming a decent looking cloud of support around these levels, and that is the same on high block capital. You can see that today we are on a day where they are defending all the way to 10% deviation with decent ratios of bid versus ask. Particularly the 0 to 1 and the 1 to 2 are pretty good looking at the moment. There's an interesting theory coming from bull theory. The 10 a.m. manipulation is activated once again. As you can see, the modus operandi is the market opens, they let the price go up, and at 10 a.m. New York opens and they dump Bitcoin. And this apparently, according to this Twitter account, has been happening consistently for many days. You can pause the video and read the full thesis, and you can see how they execute it. It looks just the same a few days ago, and they are starting to finger point who could be responsible for this. You can read more about that in Bull Theory IO Twitter account. Bitcoin and Ethereum ETF outflows yesterday while XRP is attracting capital. Bitcoin active addresses hit 1-year lows, indicating a decline network participation. The miner revenue is collapsing, drop from 50 million to 40 million daily, putting margin pressure on remaining mining operations. Unrealized losses, this is something that we need to quantify. 350 billion in crypto unrealized losses with 85 billion in Bitcoin losses. So these unrealized losses are positions that are still open in the red, and they can help us understand downside potential, because capitulation means that most of them have already closed in a loss those positions. So what helps us to quantify these things and to understand where are we standing? The size of the unrealized losses, number one, and number two, the SOPR. The SOPR is that the counterpart of the unrealized losses. It tells you if it's very low, if people are closing in a loss, or if it's very high, if they are closing in a win. At the moment, they are closing in a low. So we have progress consuming some of that remaining 350 billion, but I think it's less for Bitcoin. It's just $85 billion left, whereas it's 350 billion in crypto in general, all coins. BTC to gold RSI signal dropped below 30 for only the 4th time in Bitcoin history, a rare signal historically preceding major market reversals. We're talking about 2015, 2018, 2022 were the prior instances. So there's two videos I want to make, guys, later today. The first one is going to talk about the longs on Bitfinex. I have a signal that is fantastic to understand where are we standing in the market. Do not miss that one. The video is going to be called Bitfinex Longs Alpha. And secondly, I'm going to do a special of Bitcoin versus gold ratios. We're going to try to understand where are we standing in here and what are the chances of breaking down this all-time historic level of support of Bitcoin against gold. Extremely important to understand where could Bitcoin go next and where could gold go next as well. The two different assets in this chart. Let's do a quick wrap up. At the moment, what we are seeing on the 4-hour is definitely a channel to the downside. We can see that we broke down this level. I'm noticing now that we have a level of resistance that is coming in right there. We are pretty much getting close to that new level of resistance, which is the 43. That is roughly 87,659. Breaking out from that level could put the 63 again on the table, which is the 92. At that point, we could consume the CME gap that left one hair on the table. We could consume liquidity that we already appreciate at 91K. We could consume fair value gaps, hopefully up until the 92 and hopefully holding there for a reversal. If not, guys, there is a huge vacuum of fair value gaps in here up until 80K. So if we really want to go lower, it has to be a relative low to this level of 80,500 to start consuming massive levels of liquidity. Alright guys, I hope you enjoyed the video. If you did, hit the like, subscribe to the channel, write down a comment down below. And if you're looking for an exchange to trade, 2bit is one of the best options. It's non-KYC, 2 minutes to register, start trading with leverage, altcoins and everything that you like. As soon as you sign up, even before you deposit, they give you $50 for free to start trading. And if you deposit and you start trading with good volume, you can get up to 30,000 in rewards. You have to use the link in the description. That helps the channel. Thanks so much. I'll see you in the next one. Bye-bye.